Thanks for clicking. The Bank of Canada's plans for its balance sheet are under pressure. This according to this channel 3 weeks ago, and Bloomberg as of Friday.
Better late than never, huh?
Indeed, I had poked fun of, or chastised, the media for its lack of attention to the Bank of Canada resuming overnight repo operations in my previous 2 videos, as the bank had resumed injecting money into the banking system for the first time since the pandemic started, and the media had failed to acknowledge it.
If that's what he's going to hit us with, then I want to know what it is.
But 3 weeks later, it does appear as though the media has picked up on the story, with first Bloomberg and then Yahoo News and the Financial Post and even the mortgage industry looking at what the Bank of Canada has been doing vis-a-vis its overnight repo operations. And, as we'll see, Bloomberg was even able to secure on-the-record comments from National Bank and CIBC, with National Bank surprised at the lack of communication coming from the central bank, and CIBC, according to Bloomberg, applauding it. So, what I want to do today is briefly go over what's been going on in the overnight repo market since January 3rd, take a look at what Bloomberg was able to uncover, and then discuss some questions that remain unanswered. As mentioned in previous videos, and as we'll go over today, this is an ongoing story, and the Bank of Canada may have to end quantitative tightening sooner than it had anticipated, with all the inflationary pressures that come with it. We will obviously continue to track this story on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into these repos. Onto the repos. Very briefly, as we discussed this in the 2 previous videos, repo stands for repurchase agreement, an agreement between 2 parties to exchange collateral for cash and repurchase them later. So if CIBC has a lot of collateral on hand, like government bonds, but doesn't have a lot of cash, it can enter into a repurchase agreement with Scotiabank that will lend CIBC the cash in exchange for its collateral, with the promise from CIBC that it will repurchase that collateral at a later date. This happens every single day and is a fairly normal part of the banking system. However, when there is either A, not enough cash in the system to provide for these overnight loans, or B, no one likes the collateral that is being offered up in the system, the Bank of Canada can and will step in to provide these overnight loans, which it's been doing since January 3rd, when the Bank of Canada stepped in to provide a liquidity injection. Now, it's difficult to tell how many repos the bank has done since first announcing the beginning of them on January 3rd, as the bank doesn't provide cumulative data on its website. But if we piece together previous screenshots, we can see that the bank did $30 billion in repos in the first week, then another $15 billion a week later, combined with $10 billion worth of repos last week. And while the central bank did eventually take to Twitter to explain that this is a normal part of monetary policy and that the repo operations are a sign that market operations are moving back to where they were pre-pandemic, I noted at the time that although overnight repo operations are in fact normal, what is not pre-pandemic normal was the Bank of Canada having to do them while the bank still had $120 billion on reserve at the central bank. Why would any financial institution need a short-term loan when there's still $120 billion in cash sitting in the accounts at the Bank of Canada?
Aren't you not supposed to ask that question?
And Bloomberg, on Friday, picked up on the Bank of Canada's lack of communication, noting that policymakers have given no substantive updates about their ongoing efforts to shrink the balance sheet, despite the liquidity issues that are forcing them to intervene in the repo market. Yeah, if only someone in the media with the resources and the reach to provoke a response from the central bank would get on this. And National Bank said as much as well when they were contacted by Bloomberg, noting that they were surprised to not hear Macklem address the strains in the repo market and potential implications for quantitative tightening.
I answer to bigger people than you, my friend.
Yeah, as we went over last week during the governor's 40-minute press conference, the governor was asked 5 times about potential rate cuts, but not a single question about the bank having to intervene into the repo market. Now, for its part, Bloomberg did ask the governor about quantitative tightening, the second question of the press conference, and Governor Macklem reiterated the same standard response on QT.
Obviously, our balance sheet is gradually declining. At a certain point, it'll reach a more normal level, and it'll be time to start purchasing again to keep our balance sheet at the size we need. We put out some estimates about where we think that might be. Those are estimates. We're still some ways from there. As we get closer, we will certainly be continuing to refine that view and
I'll let you know.
Yeah, as we talked about in a previous video, the bank had estimated that it would have to end quantitative tightening when settlement balances reached $20 to $60 billion. But despite the governor's standard response, the banks still have $120 billion sitting in an account at the central bank, and the Bank of Canada is having to intervene into the market anyway. It's having to inject liquidity when there is $120 billion still on reserve. And Bloomberg reiterated this point, not at the press conference, but in its article, noting that the bank isn't talking about something much more glaring, in that CORA, the Canadian overnight repo rate average, has been running over target for much of January. And we can see this when we look at the Bank of Canada's website, where the overnight rate has jumped over the bank's target multiple times over the past 30 days. So, someone in the financial system, some bank, some financial institution, some counterparty, has either A, a lack of good collateral, or B, a lack of cash, causing overnight rates to spike, as lenders demand more compensation to part with their funds. And, as we noted in a previous video and is now being picked up by Bloomberg, this lack of cash in the system could cause the bank to prematurely, or much earlier than they anticipated, stop quantitative tightening. Basically, the Bank of Canada resuming its purchase of Canadian government bonds. Up until now, due to the hundreds of billions of dollars injected by the Bank of Canada during the pandemic, there's been ample liquidity on reserve at the Bank of Canada. The banks had lots of money. But with overnight rates spiking, that appears to be coming to an end. And it appears to be coming to an end much earlier than the Bank of Canada had anticipated. So, in summary, the overnight repo market is continuing to show signs of stress, probably due to a lack of cash in the system, and the Bank of Canada is having to step in to enforce its policy rate. And 3 weeks later, the media appears to have woken to the fact. As per the lack of communication coming from the Bank of Canada, while National Bank, as we saw, was surprised that we haven't heard very much coming from the bank, according to Bloomberg, CIBC's Ian Pollock is applauding it, noting that it stems from the need to keep monetary policy and policy operations separate. Yeah, according to CIBC's Pollock, Canadians need not concern themselves with the mechanisms through which monetary policy is implemented, but only concern themselves with the policy in and of itself, because that's worked out so well in the past.
I don't know what you're talking about.
Yeah, the bank trying to achieve its policy without explaining the underlying implications or mechanisms through which said policy is going to be achieved, and the media taking the bank at its word, failing to question any of its premises or conclusions, has caused and is causing a lot of headaches for a lot of households. Given all of the headaches brought on to Canadian households from the last time that the media failed to ask ridiculous assertions coming from our central bank, seemingly forgetting that money printing when no one is working would equal inflation, I would think that it would want to be much more on the ball this time around. With that said, as of Friday, it looks as though the Canadian media has awoken to the fact that A, Canada does have an overnight repo market, and B, the Bank of Canada has been injecting liquidity into it. And, as such, has been able to get at least some on-the-record quotes from some of the bigger players, from National Bank, from CIBC, etc. We will continue to track this repo story and if and when the bank is going to be ending quantitative tightening and all of the economic implications stemming therefrom. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.